every fund I went to, the one thing I realized is uh, everybody charges too much in this ecosystem. At least back then they did. I went to like wealth managers who would tell me, we will charge you 2% to introduce you to a fund manager. Then who will then again charge you 2% if he makes money or doesn't make money for you. So if you lose 4-5% of your money even before you've gotten started, you need some kind of an oracle to be able to beat the market in the long run at those costs. So we wanted to start a very simple product. I think the very basic premise we had was to create something which is cheaper, more efficient, simpler to understand. So we removed every other norm in the industry, like distributors. We said we don't want distributors. We'll wait for the client to come to us. People have lock-in periods. We said we won't have lock-in periods. We'll keep it totally open-ended. So people can enter at any time, exit at any time. In terms of transparency, we said people report NAVs monthly, we report NAVs daily, we'll give you a dashboard where you can check what is going on. And instead of charging a fee on True Beacon One, the fund, where if you make money or do not, normally you would pay, we said we will only charge a 10% flat carry, and that too with a high watermark level. So you don't pay on your profits twice. So we put these things together. We started the fund. We had no plan of how we will scale, who we will cater to. But this was very much the product I thought I would like to invest in if I were to be an investor. And it's been a couple of years now. We've started a bunch of products. Today we have a PMS, which we launched just now. We have a fund which is focused on foreigners investing in India through Gift City. And we have the flagship fund, which is True Beacon One as well. And lots of learnings. If I have to summarize the journey, I would say the one thing we have done, which very much resonates with our ethos, is we've been very conservative from the beginning, and we continue to be conservative. Even today, where the markets are, I feel like there are too many headwinds and macroeconomic issues, which maybe do not warrant the multiple that the markets are getting today, but the markets have a mind of their own and many might disagree. So we continue to remain conservative. We've been hedged between 40 to 60% throughout our journey. And as we speak, we continue to remain hedged 50%. The need for a cheaper, more efficient service out there, I think, was required. And we've kind of like, because we are charging so little, I think we only work on scale. So we've had to focus on the very top end of ultra HNIs, because, if I service a client and he only puts in 1 crore rupees, at the fee that we charge him or the carry that we charge him, it might not make sense. But I think there is room for both. If you look at stock market penetration in India, it's abysmally low. Very few people have access either directly or indirectly today. As that number kind of grows, I think more products, more room for people, wealth managers, asset managers will be there in the Indian ecosystem. Reason why people come to the public market vis-a-vis private or debt is the liquidity that it has to offer. I think we don't sell it enough. People don't realize it enough. But the ability to get your money back on any given day without having to pay a fee at the last NAV of the day, I think is an incredible benefit, which kind of differentiates one fund from another. It to a certain extent, it also becomes like, tomorrow you can question whether you should leave the money in your bank in a savings account versus here, if you're truly able to achieve open-ended. In the 50 companies in the Nifty, we build a portfolio of 20-25 companies. But the key determinant for us almost is, that hedging ratio. Today, we are hedged 50%. So the markets go up 10, we are only up 5. But we run some strategies on top of that, which we hope will give us, say, a 40 or a 50 bips alpha every month, which for the year we hope will make up about 5%. So ideal scenario, if the markets go up 10% this year, we want to be up six and a half, seven. These strategies which aim to give us a little bit of alpha are, like they're focused on options and taking advantage of mispricing in options, and think of it as something which takes advantage of short-term discrepancies in the derivative market. I think the Indian markets are as saturated as the Western ones, and by virtue of that, I think they often are. At the end of the day, prices still move based on emotion, and the maths kind of follows, right? So there are many times when you will have those opportunities. So what we have done is we have put in a great team together, led by the CIO. His name is Rohit Perry, who has relocated from Singapore to join us. He's aided by this guy called Prashant, who's his deputy, and then we have Adarsh, and we have like the odds of that strategy beating the Nifty by 4-5% a year is something like 70-75%. So we're all very optimistic about it and looking forward to that.